TSMC just posted the most explosive earnings in the semiconductor sector this year. Revenue hit $35.9 billion, up 35% year over year. Net income surged 58% to a record $18.2 billion, and they raised their full-year guidance. Today we are breaking down what happened, why it matters, and what this signals for AI and the entire chip sector. Welcome to the Money Mind. I am breaking down TSMC, ticker TSM, the most important company in semiconductors that most people have never heard of. Let us get into it. First, what does TSMC actually do? Taiwan Semiconductor Manufacturing Company is the world's largest contract chip maker. They do not design chips, they build them. Apple, NVIDIA, AMD, Qualcomm, Broadcom, all of them depend on TSMC to manufacture their most advanced processors. TSMC makes roughly 90% of the world's most advanced semiconductors, 3 nanometer and below. Every AI model you use, ChatGPT, Claude, Gemini, runs on hardware built by TSMC. They are the choke point. No TSMC, no AI revolution. That is how important this company is, and right now they are firing on all cylinders. Now let us talk about the numbers. Q1 2026 revenue came in at $35.9 billion. That is a 35% increase year over year, and it beat Wall Street estimates by about $440 million. Net income hit a record $18.2 billion, up 58% from last year. Earnings per share came in at $3.49, beating estimates by 11 cents. But here is where it gets really impressive. Gross margin was 66.2%, operating margin was 58.1%. Both beat the high end of their own guidance. For a hardware manufacturing company to have margins like that, it tells you just how dominant they are. There is no real competition at the leading edge. So what is driving these numbers? One word, AI. The hyperscalers, Microsoft, Google, Amazon, Meta, are pouring hundreds of billions into AI infrastructure, and every single one of those AI chips gets made at TSMC. NVIDIA's H100s and Blackwell GPUs, AMD's MI300 series, Google's TPUs, Amazon's Trainium chips, all TSMC. Demand is so strong that TSMC's 2-nanometer process, which entered volume production late last year, is already supply constrained. They are also expanding their advanced packaging capacity, that is CoWoS technology, which is how NVIDIA's massive AI GPUs get assembled. And here's the kicker. TSMC is raising prices on advanced nodes every year for the next 4 years, through 2029. That is the kind of pricing power that only comes from being an irreplaceable monopoly. TSMC also raised their outlook. For Q2 2026, they are guiding revenue between $39 and $40.2 billion. That is a 10% sequential jump. And for the full year, they now expect revenue growth above 30% in US dollar terms. That is up from their previous guidance of mid to high 20s. On capital spending, they are planning $52 to $56 billion for 2026, up 40% from last year. 70 to 80% of that goes directly to advanced process technology. 2 nanometer, 3 nanometer, the bleeding edge. They are also continuing their Arizona expansion. It is a strategic hedge against tariffs and a requirement for winning future deals with U.S. hyperscalers. But CEO C.C. Wei admitted they are very nervous about the scale of that investment. Building chips in America is significantly more expensive than in Taiwan. So let us talk about the bull and bear cases. On the bull side, the AI spending cycle has years left to run. Every major tech company is racing to build more AI capacity. TSMC's pricing power on advanced nodes is extraordinary. Their 2-nanometer ramp is beating expectations, and a 66% gross margin for a manufacturing company is almost unheard of. Analysts have an average price target of about $423, which implies 14% upside from here. On the bear side, geopolitical risk is real. Taiwan sits in a complicated position between the US and China. US tariffs add cost uncertainty. The Arizona fabs are expensive and complex. There is always cyclical risk in semiconductors, and the stock has already rallied 25% in 2026. Now here is what this means for the broader semiconductor sector. TSMC's results are a leading indicator. When TSMC beats, it usually means their customers are doing well too. NVIDIA is TSMC's biggest AI customer. Record TSMC revenue means record NVIDIA chip production. That is a bullish signal heading into NVIDIA's next earnings. AMD benefits from TSMC's 3 and 4 nanometer capacity. Their AI partnership with OpenAI depends on TSMC fabs to deliver. ASML makes the extreme ultraviolet lithography machines that TSMC needs. A $56 billion Capex plan means more EUV orders. ASML is a direct beneficiary, and Broadcom, which designs custom AI chips for Google and Meta, also relies entirely on TSMC for manufacturing. The bottom line is this: TSMC's earnings are not just about one company. They are a health check on the entire AI chip ecosystem. And right now, the ecosystem is thriving. Here's my verdict. TSMC is the most important company in semiconductors and arguably in the entire AI revolution. This quarter proved it. Record revenue, record profit, raised guidance, and a $56 billion bet on the future. For long-term investors, this is a strong buy with high conviction. For short-term traders, the stock has run hard, so watch for a pullback entry around the 360 level. Either way, TSMC is a stock every investor should have on their radar. If you found this breakdown helpful, hit subscribe. I am the Money Mind. Let us keep building.